Καλησπέρα σε όλες και όλους. Είμαι η Ιλιάνα Λεπίδα, εταίρος της δικηγορικής εταιρείας Dryllerakis και συνεργάτες και θα συνεχίσουμε μαζί την απογευματινή συνεδρία του 17ου Tax Forum του Ελληνοαμερικάνικου Εμπορικού Επιμελητηρίου που μας δίνει την ευκαιρία να ανταλλάσσουμε απόψεις σε τρέχοντα θέματα της φορολογίας. Ας περάσουμε στον αξιότιμο καλεσμένο μας. I switch to English. We have the honor to have today with us Mr. Karl-Heinz Haydl, a global VAT GST practitioner with over 30 years of practical experience in the field of VAT. He is a member of the business at OECD Tax Committee and the BIAC VAT GST chair, and also the business chair of the OECD VAT Technical Advisory Group. Moreover, he is a member of the EU Commission's VAT Expert Group. He is here today to discuss with us the VAT developments in EU and international level. Mr. Haydl, VAT is a very old tax. The PowerPoint, which remains one of the largest revenue sources for countries despite the VAT gap due to inadequate tax collection systems and tax fraud. What has changed in the last years?
Yeah, thanks, Liana, first of all, for your kind introduction. It's a very big pleasure for me to be with you today. Unfortunately, I couldn't come in person, so I do it virtually. Well, to your question, VAT has been a really global success story the last 50 years. As you can see from this slide, it has become the fastest globally growing tax, with this being the third largest revenue source for most of the OECD countries, up to 20% of the revenue income. And also, if you look at the map to the right side, you can see that VAT has become actually from 10 countries in the 60s to over 168 countries in 2018, a very, very popular tax globally because it brings in a lot of money for the government. As we can also see on this slide here on the left side, you can see in some countries the VAT revenue income is about 12 to 30% from the overall revenue income, like in Switzerland, for example, or Australia. But if you go to the right, you can see, for example, New Zealand and Chile, for example, they have over 40%. And in Europe, in the EU, we have about 30%, which VAT makes up from the overall tax revenues. You can really see then that VAT really is one of the most reliable sources for governments to fund their expenses from.
Okay. And which are now the key drivers for international VAT policy, Mr. Haydl?
Yeah, thank you, Liana. I mean, if we're living in a world of fast and constant change, as we all know, with globalization, technology, and the social and industrial internet, we are all only one click away. So the world has become a global village at the end of the day. We are in the middle of a digital revolution, which impacts all business sectors. So it's not only the digital economy per se, there's no digital economy as such. Every business will get digital in the next 20, 30 years. So we have new business models, new go-to-market strategies, and all of these impacts also, of course, have consequences for the revenues of the governments, which they need to safeguard the revenues based on the tax systems. They have to make sure that their administration works efficiently to collect the tax. So you can see there are quite a lot of challenges here, which also drive future policies. And of course, we have to keep in mind, we're in the middle of a pandemic at the moment. And so post-COVID, there needs to be recovery, and all the funding which has been done now has to be possibly paid back. So their tax and VAT might also play a very, very important role going forward.
Okay. So in the field of digitalized economy and direct taxation, OECD and EU are making efforts to allocate taxing rights to market jurisdiction, despite the lack of physical presence of a foreign enterprise. Maybe taxing transactions in market jurisdictions would be better left to VAT and GST, of course.
Yeah, thanks, Liana. I mean, this is a question to a VAT expert. It's a matter of my heart to say, actually, possibly VAT would be the best tax to look at, sort of taxing where the consumer is. But of course, given the political dimension and given that not everybody in the world has a VAT system, it is clear that VAT cannot be the only solution. So that's why you can see also from the international direct taxation framework discussion at the OECD and globally that they are looking also at direct taxes to be allocated more and more to the market jurisdiction in addition to VAT. And therefore, you could see in the last couple of years a lot of political discussions happening at the OECD, which now this political agreement on the Pillar 1 and Pillar 2. But in the meantime, as we also have seen here with us in Europe, but also further away, there have been unilateral measures taken by countries such as digital service taxes. And now the question will be, after this political agreement at the OECD with Pillar 1 and Pillar 2, will these countries be able to continue with the digital service tax? Do they have to actually abolish it based on the global agreement which have been now made politically? This will all to be seen. And of course, if we then see from a VAT perspective, VAT, the issue is not about the allocation of the taxing rights. There we have the destination principle, which allocates the taxing rights to the jurisdiction of consumption, so where the consumer is located. And therefore here, the issue in the VAT is rather on the collection side. How can we ensure that a faraway company which supplies a digital service to a consumer, for example, in Greece, is going to register in Greece and pay and charge the VAT, the Greek VAT, to the consumer and pay to the government. So here the issue on the VAT side is more a collection issue, whereas if you look at the direct tax side and if you look at the discussions from the last couple of years, it's all about the allocation of the taxing rights, which we have seen now. It also goes, of course, from a direct tax perspective into the direction of VAT to allocate the taxing rights for direct tax as well into the market jurisdictions.
So both VAT and income taxation should coexist. Okay.
Yeah, I think so. I mean, I think they have to coexist because, as mentioned before, VAT is not seen as the only solution. And so that's why we have to work with both in parallel, but hopefully interacting much more as we do it now, since both taxes have to sort of work together, and we have to sort of get away of the silos which we are currently still in.
Okay, thank you. Now, could you please analyze which are the OECD developments in the field of VAT, GST collection regarding the digital economy?
Yeah, very happy to do so.
I'm sorry, the European level, sorry, the developments in the level of EU and OECD. If you want first to talk about the OECD developments in the VAT field and after at the EU level.
Yeah, wonderful. I have also a slide on that, if you can see that. Yeah, so if you see here, for example, the developments on the OECD VAT side are quite actually immense. A lot of things happen there. If you see at e-services and low-value goods, one of the key successes of the BEPS action item 1 on the report on the digital economy were the recommendations of the OECD to implement VAT rules for cross-border e-service and low-value goods. And more than 75 countries now around the world have already implemented these recommendations, and 40 others are in the moment about to implement this. You can really see that these recommendations have been really taken up. Of course, we in the EU, we already have rules in place since 2015 with a mini one-stop shop and with e-services, telecoms and broadcasting services. But as you know, the OECD has a much more global outreach, and here the impacts are immense. You can really see how many countries have followed these recommendations. And so at the moment, the OECD is focusing on the sharing economy, because clearly also there we have issues that more and more, whether it's accommodation or the transport sector, more and more these kind of services are supplied via platforms. And so the question is here as well, how can compliance be ensured? And so the discussions are going still on the sharing economy, in how far platforms can play a role in the collection. And of course, what I mentioned before with the EU, with a mini one-stop shop, the OECD has also advocated a so-called simplified collection regime, where faraway countries can register simplified in the country of the consumer and pay the VAT via simplified registration regime to the local tax authorities. So that's more or less what we are seeing on the OECD side. And as well, one point which I want to issue, or which I want to highlight is, as I mentioned before, we are only one click away these days, being a consumer and being a supplier, and there a big role plays the platform economy. So we are seeing much more services and goods being sold via platforms. And the question is now, and the OECD has brought it up in their report on the platforms report, can platforms play a role in the VAT GST collection process? And if yes, what kind of role can they play? And as we see, and as we know, the platform economy is very diverse. We have different business models, we have different sectors involved. So it's not easy to come with a one-size-fits-all solution. Therefore, you can see there are various roles which a platform can play, starting with the voluntary role, sort of educating the supplier and also the consumer about their compliance obligations. There can be an information sharing role where the platform shares data of the supplier and the consumer to the tax authorities, for the tax authorities then to ensure that the underlying supplier pays his VAT. And then, of course, you can have a so-called joint and several liability regimes in place, where if the underlying supplier doesn't comply with the VAT obligations, then the platform is made in joint and several liable. And then the last actually role it can play is full liability. So this means the platform is actually given the role as a VAT GST collector. Now, quite often this is a challenge because not every platform is involved in the payment process. Not every platform, for example, when it comes to the sale of goods, is involved in the delivery of the goods. So there are really quite difficult aspects to consider when it comes to whom we can make liable to collect the VAT. But clearly there's a trend here all over the world that platforms going forward have to play an important role when it comes to VAT and GST collection.
Okay, thank you. What about the developments in the field of VAT in EU level?
Yeah, on the EU level, and there I also have a slide if it comes up. There we can see, of course, various developments. As you all may know, in 2018, the Commission came up with a so-called proposal on the definitive VAT regime, ensuring that cross-border supply of goods, B2B, would be taxed in the country of destination. Now, this proposal has been getting a lot of, pushback, both from member states in the EU, but also from business, because it wasn't seen as a simplification, and it was also not seen as fighting fraud. So given these discussions did go nowhere in the Council, so as I mentioned on the slide, the proposal is somehow politically dead at the moment. So the Commission, at the end of the day, has to think about other rules, how to improve the current situation. And as we have seen now in the last couple of years, we have many EU member states who actually have implemented technological measures when it comes to complying with VAT. So we have, for example, in Italy, mandatory invoicing, in Spain, a so-called SII system. I think also Greece has implemented certain compliance, technology-driven compliance. But all of course, if you do business in the EU, and now every country has its own technological kind of system, it creates a lot of costs and therefore, and also burdens. And therefore, the Commission has come up with a so-called action plan on tax. And there is an important VAT initiative mentioned in there, which is called VAT in the Digital Age, which actually comprises of three main topics, which I mentioned there: transaction-based reporting, platform economy, and the extension of the one-stop shop. And here the Commission tries to see whether it can come to a more common, a consistent approach of all these different technological solutions, which we are seeing here in the member state. Because one thing is clear, that if things getting more and more diverse, actually it's also difficult not only for business to do business, but also tax administration cannot exchange data amongst themselves between different countries in an easy way, because they're collecting different data. So therefore, I think it's very important, this initiative that the Commission has taken up, in order to see how things can be made more consistent. And also, I think what is very important, it's mentioned there as well, we have a so-called DAC 7 proposal, which has now been adopted by the Council. So it's not a proposal anymore, it has become a directive, which has to be implemented by the member states in the next couple of years. And there it's a proposal which actually obliges platforms to share a certain information, and it's driven by direct tax. But of course, there are also some angles here which VAT is concerned. So the question is, of course, can this can DAX 7 be used both for direct tax and VAT? And as we also know, in VAT, we have own reporting requirements for VAT purposes when it comes to platforms. So the question is, are we not double reporting here, possibly the same kind of data, once for direct tax purposes and the other one for VAT purposes? So there's possibly also a need for further alignment between both direct tax and VAT to ensure that the same data is only submitted once to the tax authorities, so that there is not an additional burden for businesses, especially platforms here, who try to support the authorities in ensuring that there is compliance with the rules.
Thank you very much for the very interesting analysis. I would like to highlight one issue that you analyzed, focusing on the VAT in the digital age you analyzed, and the digital platforms' role, which act as intermediaries for thousands of suppliers and consumers worldwide. I would like to highlight the new trend that relies on the digital platform's burden to collect and remit the tax due on the ultimate supply to the end customer. I think this is because tax administrations do not wish to manage too many taxpayers, and consequently they enforce compliance by making the digital platforms the tax collectors of the VAT due. So I suppose that this trend could end up by taxing the business and not the customers, despite VAT's role as a consumption tax. Finally, in the years to come, we will see the Court of Justice of the European Union's role, which has to clarify several legal issues, given that the number of business models in the sharing economy you analyzed seems to be currently unlimited. So we are waiting the court to clarify the role of platforms which bear full VAT liability and act as disclosed or undisclosed agents. So in this respect, the upcoming court decision in the Phoenix case, I suppose it expects to resolve many of these issues. Thank you very, very much for being here with us, and I hope we will have the occasion to meet again.
Thanks, Liana, and a pleasure to be with you, and hopefully soon in person again.
Thank you.